Here we go. Overnight action. We're watching some pressure in the equity markets and a great opportunity to bring in Craig Bolanos. Craig is co-founder and wealth advisor at VestGen Wealth Partners. All right, Craig, as we get things started this morning, seeing the Dow in the red, not really a surprise because we saw that for 10 consecutive sessions, something we hadn't seen since 1974. It broke out of that yesterday, but still, we are where we are. What are you seeing?
Well, you're like the Grinch who stole Christmas on a Friday, my friend. Yes, it was absolutely terrible. 10 days of pain, but 10 days of pain in a backdrop of a year that was phenomenal when you just simply knock markets down 4 to 5% off their high. That's called a dip. That's not a correction. It's just a dip, and it's normal. And, you know, what I tell everybody is now is not the time to panic.
Well, and that's good to bring that in because, again, when you look at what we saw there, it will go down in the record books as the longest one since 1974, but as you mentioned, not actually a crash or anything like that. Let's talk, though, about maybe Treasury yields, 10-year yields moving higher yesterday. What's happening there?
Well, now that's one heck of a problem. I think people need to understand that I don't know if the bond market is the smart money. Some people have said that, but let's play this out. So at the end of September, the 10-year Treasury was 3.7%. You look today, that same 10-year Treasury, boy, it's over 4.5%. So a lot of listeners might be like, no big deal. But it is a big deal because you've got Treasury yields up 0.8%, despite the fact that the Fed cut rates in September, cut rates in November, cut rates in December. So every time the Fed has cut rates, Treasury yields have gone up. Whoa, there's a problem, Will Robinson. Maybe the national debt's a little too big. Maybe the $87 billion of interest alone we paid in November is too big. Maybe we ought to end the pork belly spending and get things under control. That's the message the 10-year Treasury is giving everybody in their stocking this holiday season.
Well, you look in stockings of some other countries, and, you know, you look over at, like, Brazil, their currency hitting record lows, driven by market concerns over the fiscal outlook. Pakistan central bank cutting their key policy rate by 200 basis points down to 13%. Their inflation earlier this year was at 40%. So I guess on the economic front, third estimate for third quarter U.S. GDP showing the economy growing. What's happening?
Let me tell you, I'm as cognizant as anyone to the risks facing the economy. But the simple truth, and that's why I love this show, that's what we talk about, it's truth on your program, is there's no major economic indicators suggesting a slowdown's imminent in the United States. I mean, we're not seeing it in the jobless claims. We're not seeing it in retail sales. We're not seeing it in business spending, durable goods, nor in PMIs. Yes, a slowdown could absolutely happen, but they typically don't appear out of thin air, and there's simply no signs the economy is losing momentum right now. Hence, you know what? If we talk about geography, I'm reminded I live in the single greatest place in the world, and it is a good place to be and a good economy to be a part of.
Yeah, that's great. Okay. As we kind of wrap up here, and we're wrapping up the year, just want to give you an opportunity to kind of look back at 24, look into 25. What words would you have for those who might be a little concerned or for those who are really optimistic? I guess that's everybody, right?
Yeah, no, that's right. It's a tale of two stories. And for everyone who's concerned, you have every right to be concerned. Economies, economics, all of these things are fragile. Things move quick, and they can come apart. But I remind everybody of some simple truths. And while these are trading truths we can apply to them as investors as well. Number one, new highs tend to make new highs. Number two, the trend is your friend. Number three, don't fight the tape. And if the momentum is still here in the economy, if the intermediate trend of the stock market is still higher, then this market can and will climb a wall of worry. And when you take that outlook, I think it allowed investors to look past the noise at the year-end 2023 and get invested. I think it allowed people in 2024 to look through all of the problems, look through the divisiveness of an election, and stay invested. And as people come into 2025, we're going to deal with terrible headlines. Is there the looming government shutdown? We'll find out today. What's going to happen when we have a new Congress? How functional are things going to be? How disruptive is the system? But if you think about protecting you and yours, grow and protect your money, invest for the long term, work with a good planner, and any of these problems, these too shall pass.
Oh, that's great info. Craig Bolanos is co-founder and wealth advisor at Vestgen Wealth Partners. More information, you can GetRetiredStayRetired.com. I love it. GetRetiredStayRetired.com. That's Craig Bolanos. Craig, thanks for joining us on this final Friday of 2024. Key Fed inflation measure